All right, good morning, everyone. How's it going? Okay. Last night's session in the States was a bit lackluster, to say the least. Very little volatility. We did see a start of a bit of a sell-off at the beginning of the session. We just kind of drifted back up and trended sideways from there. Um, Most of the sectors managed to show a gain on the day outside telecom and consumer discretion stocks. We have gotten further and further into the meat of the earnings season. We saw Verizon. I think we saw Travelers. We saw IBM. We had some of the some reasonably big companies that were out yesterday and reported. What I think was really interesting is that most of the numbers that came out midday yesterday were actually a beat on expectations. Johnson & Johnson was out as well. I mean, I think they beat quite nicely, if I'm not mistaken, no, sorry, it wasn't Johnson & Johnson, it was Travelers. Travelers beat quite nicely on earnings expectations. Guidance, everything looked fine, but the shares still traded down 2%. I mean, you can see the reason. I mean, the Dow was down 44 points on the day. At one point, it was down about 130 points, simply because all three of those components, Johnson & Johnson, Travelers, and Verizon, all in the Dow now, and they were all down 2% and earnings were reasonable. But I think that just kind of puts us, shows that we're at a different place right now in the market. That we're going to have to start to impress now. Markets are starting to get a little bit expensive, in terms of earnings, and we're going to really have to start to see some follow through to see the rally be able to continue its momentum. We don't have a whole lot of data coming out, but we do have a Federal Reserve meeting next week, so we'll keep our eyes firmly fixed there. All right, Asia, we saw most of the markets up. Australia was down a little bit, obviously, a little bit on the back of the correction we saw in the miners yesterday, a little bit of profit taking, but all the rest of Asia was up. We saw Shanghai that was up almost 2% on the day, which is 2 days in a row that it's been up, so that's quite impressive. I think people there's some relief there in China, simply because not only have they come to the market with cash injection into the credit market, but they've actually told everyone what they're doing this time, and they kind of told them that they will be there. They've given them a little bit of insight into the way that they're going to do it, etc. And I think that that's just kind of calmed some of the nerves there for the short term. Like I said, I think personally, I think that could end up being the biggest story of the year this year if it continues to build. It's one of those problems that popped up probably 9 months ago. Hasn't gone away. It's becoming an issue again. Obviously they're quelling the fears of that now. If it becomes an issue now in the next couple of weeks again, it starts to happen a little bit more often and more frequently, then I think we're looking at a really serious problem. So we'll keep our eye on that as one of the major things to watch in 2014. All right, to Amplat's full year trading update out this morning. Guidance between 480 and 590. I don't actually have the trading statement here. Running a little bit behind. What was anybody see the actual output numbers were? Okay, we'll try to get that back to you in just a little bit. But that's what the expectations were for. All right, bulletins. We also had a second quarter trading update out this morning. Output estimates there. You can see those numbers. Speaking to someone at one of the big investment banks earlier, saying that they think the numbers are a touch light there out of bulletins. And then we've got later tonight in the States, we've got U.S. Bancorp, United Technologies, Abbott Labs, and eBay. All right, market data, like we said, quite light. We saw the Aussie CPI was actually a little bit hotter than expected. We had all industry activity index in Japan dead in line. A little bit later, we've got CPI numbers here locally. That is something that I think you need to pay attention to. We start getting really hot on those numbers. That's definitely some signs to worry here locally. We've also got the jobless claims and the ILO and unemployment numbers out of the UK, and then later we've got mortgage apps in the States. All right, so let's jump into the maps. Okay, we'll keep it a little bit short today. There's not that many things that have changed from yesterday. The first thing we're going to have a look at here is just the Aussie. It actually just jumped down into the 30-minute chart. We talked about this yesterday and this us sort of popping through, and you can see there right at the open we did spike up, where we did open up above this level here at let's call it 42,350. Okay, we'll call it 42,350 as the number. We opened up above that yesterday, and really we tried to really reasonably poorly, I would say, relative to what the rest of the global markets were doing. I think a lot of that was probably because we saw a little bit of profit taking in some of the miners, be it Anglos, Billies, Kumba, and even some of the gold counters. But we're going to have to watch this level closely. Like we said, is a significantly higher target than this. I would say the target is all the way up at 44,000 if we break up above this. So watch this closely today. Another day or two of a fail, and then maybe a drop of this kind of some sort of support there might be a bit negative in the short term. I just took that whole thing away. Okay, let's have a look at Standard Bank. Next couple I'm going to show are just some of the better setups in the market have been. Just to refresh your memory, I'll go back and show you a little bit longer term, but this support to me looks like it's coming in right around 23 if you're going to try to look at this as support, this sort of trend line support over the past year. Remember, in the big picture here, in the longer term, this is a 10-year chart. Right around 120 is really where major support is, and when I say major, I mean this chart is really building an ascending triangle here that it's broken out of, came down and tested at 120, and then pushed up to 130. So buying the pullbacks on this, to me, at every turn is your best bet. It's one of the better setups in the market. I think at 120, anywhere here is probably a good idea, but I think it's definitely coming into some sort of a little bit more reason to buy at 123. Anglos also definitely changed tact here. I mean, you can see that we had a 3-day rally of upwards of 10%. To me, it's definitely a signal that there's a turn in the miners here. 230 is definitely the level that I think we're hoping for this thing to pull back to. I think it's definitely worth a nibble there at 230. It has some significance, and it's definitely broken up through that. So a pullback from the highs up around 257 only 2 days ago down to 230, I think to me would be a great little level to have a nibble. Billetins, same sort of thing. We've really just been trending up here, especially as of recently. I don't expect it to come all the way down there. We'll go back and we'll look at this in the same sort of light. We'll look at a 10-year chart here, and you can really see. Let's just take this from the closing highs, and we'll run it across. In fact, let's draw this from the all-time high here previously, and you can see it lines up beautifully to where we really broke out of this little these two little attempts here, right around 325, I believe, 324, 325, somewhere in here. Regardless, is support. However you want to draw it. You could take this thing that we broke out down here around 310. But somewhere on a pullback here in Billy's, I think is one that you have to nibble on. We were talking about this yesterday. They are going to be reporting in Australian dollars. So they're getting actually the benefit of a weaker currency there in their reporting, and I think that's going to be big for them, just like some of the Rand stocks are. A lot of their costs are in Australian dollars, but they're earning U.S. dollars, and there's been about a 15% depreciation in the Australian dollar over the past 6 to 8 months. All right, and the last one we're going to have a look at here is CFR. I know we've talked about this 100 million times, and that 105 was a breakout, but we've been chopping around quite aggressively over the past few sessions. what you can see here is, any way you look at it, it's rebroken out, I would say, above any closing high as of yesterday. And if you look at it on in a 30-minute chart, you can really see here we spiked up to 108 the day that Switzerland was closed, but you can see we closed all the way down at 107 on that day. So we definitely took out closing highs. Yesterday we also closed above it, closing all the way up at 107.95. So I think we've definitely broken out here in CFR. I see a target. If we're looking at the year chart of as high as 112 at least on the breakout from 105, but if you're looking on the 30-minute chart, I think you can even argue that the target could be higher, maybe as high as 115. So just keep that in mind. This thing can have some more legs. It continues to trade well, even with the recent sales miss that it had. And that's it for today, guys. Thanks a lot.